It is currently a Saturday at 8:48 p.m. Cheers. This is my chocolate milk. I unfortunately am 22 years old and I'm not going out to a party or to a bar. But instead, I'm here making a YouTube video for you guys and myself, my future self, I hope. All right, hello. Good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we are going to be talking about some cover call strategy ETFs, both synthetic and cover call themselves. So what I want to do in this video, if my screen will load, I'm going to click this in shortly, we shall see. I want to go over some of the kind of hidden dangers of cover call strategy ETFs, something that you got to think about before you get into them. And I also want to talk as someone who owns a majority of their personal net worth within synthetic cover call strategy ETFs. I want to tell you guys, was it the right call? Was it the right move to buy these cover call strategy ETFs? If I could go back, would I do something different? And how am I going to proceed in the future owning all these ETFs? So if that does sound good, we're currently up to 8,537 subscribers, 46 subscribers in the past 28 days. We're still rocking and rolling. And I do got to say, before I get into this video, income producing activities. If I read here, video editing. Something that I didn't really want to do for a very long time, but it's necessary to take this channel to another level. So I might be posting less videos, but hopefully they're going to be better videos. That's my intention. So without further ado, let's get right into it. So the cover call strategy ETFs that I own, we're going to start with YieldMax. That is the first one. One thing I got to say, cover call strategy ETFs are for income. They are not necessarily for total return. And this is something that has been pointed out on by a lot of my subscribers in the comments. But what I do want to mention on this is they are for income. They are in the direction of income. If you are looking for a total return, the best thing is to go for maybe an index such as SPX for the S&P 500. You could buy VOO, you could buy VTI, you can go to Canadian ETFs, XEI.TO. The best returns could potentially be in underlying stocks. They're not going to be in cover call strategy ETFs. They are for income. And if we look at the S&P 500 over the past 5 years, we see a return of about 97%. Okay, 97%. When we look at YieldMax over the past, it looks like about a year and a half, a year and 9 months, roughly about that. We see that YieldMax is down 36%. Of course, YieldMax pays a pretty big dividend at 54%. But a cover call strategy ETF will never outperform, in my opinion, the total index. They are for income only. And a reason for that is expense ratios are a lot higher on cover call strategy and synthetic cover call strategy ETFs than actual indexes or ETFs that don't do cover calls. For example, if we look at the expense ratio for YieldMax is 1.28. This is the expense ratio you have to pay the fund managers in order for them to write and manage the fund itself. When we do look at another expense ratio, we can go to SCHD, and SCHD, when we go to the overview, you're going to see an expense ratio which is 0.06%. So for every $10,000, you're paying $6 or 60, something about there. It is almost insignificant. When you look at YieldMax, if you have $10,000, you're roughly paying $128 compared to $6. That is the correct correlation right there. So there's definitely a big difference when it comes to expense ratios for, let's say, not cover call strategy ETFs versus cover call strategy ETFs. Another thing to mention is the overall performance in down markets. With cover call strategy ETFs, you'll notice that they get hit significantly hard in down markets and they don't recover as well. So for example, in 2025 April, when we had this down market in the S&P 500, where we went from 6,100 points all the way down to, we touched under 5,000 points here. We go to YieldMax, you'll see that at the same time frame, if I'm going to zoom out a little bit more, we started really roughly about, we're going to go to April here, $14.60. We dropped down all the way down to $11.15 roughly. Remember, our high was $14.54. We have not reached back there. We maybe got close to $14, $14 somewhere about there, but we never reached back over it, and we continue to trend down. Majority trend for most covered call strategies, if not all, is a downtrend. And that's just due to the huge income that they're paying over time. Definitely, if you're looking at some of the major covered call strategy ETFs and the real high yielding, they are well into the double digits. So huge income. And at that point, the share price is not able to keep up. Now, when we look forward, kind of further going into this point here, where we had YieldMax, which was at $14.50. Pardon me, $14.50, never returned back to that level, is now paying lower dividends. When we go back to the dividend history of most of the covered call strategy ETFs, I'm going to show YieldMax. When they started, this is a very crucial time right here, which was September 18th, 2024, they started to pay weekly dividends. And that's important because their first 3 dividends were all above $20. See, 22, 22, 20, 20 cents. Okay. 20 cents, not $20, 20 cents. I wish they were $20. That'd be awesome. I hold 1,370 shares of YieldMax. I'd be rich. Okay. Now, as we move forward and we go along, you see we start to see smaller and smaller dividends over time. And this comes as YieldMax's YieldMax, the share price has fallen over time. You see that the dividends become less and less. And now I don't think we've seen a 20-cent dividend in weeks. The last 20-cent dividend was, if I really scroll back here, this 24-cent dividend, which was March 5th. We are currently September 13th. Okay, so March 5th. That was almost 6 months ago that we seen a 20-cent dividend. And it's not only YieldMax. A popular covered call strategy ETF on the NASDAQ 100, QYLD. This was one of the original covered call strategy ETFs open to the market. If we scroll all the way back to 2014 when the fund was first introduced, the ETF, we see dividends 250, 260, 209, 222, 23 cents. So when we scroll all the way up to 2025, 2024, as the share price has fallen over time for QYLD, so has the dividend. You see dividends now, they're approaching the range of 16, 17 cents, 18, 18, 16. So they've definitely fallen over time. Okay, so now this begs the question. We see, okay, covered call strategy ETFs, they fall over time. Their dividends get smaller over time. Why do people buy? This is why people buy, okay? When I zoom in here, this is my monthly income and how it transformed with covered call strategy ETFs. We're really diving in, so stick with me. Okay, so we see January 2024 right here, my income was it was less than $200 every single month. And it was consistently under $200 every single month until July 2024, where I hit $250 in a single month. You can see the point at which my income started to increase when I started to invest into covered call strategy ETFs. My income went from $250 to $326, $451, $713, $633, and then my first $1,000 munch. That is a really big meal. $1,000 munch. My first $1,000 month, which was December 2024, at $1,061.47. That was a huge milestone. But then in early 2025, I only continued to ramp up that journey. My income went from $1,100 to $1,400, back to $1,100. It seems like we had a really good dividend there. Then in April, when markets crashed, wasn't a market crash, a market correction. I went big on margin and investing, and I was able to boost my dividend income all the way up to $2,500. Surprisingly, a lot of these positions I'm actually still up on today, even though you might think, okay, they're paying a lot in dividends and covered call strategies go down over time. I was able to lock in some really good positions on my covered call strategy ETFs like Coney, like MSTY, like NVDY, and Babo, which I was actually still, maybe not MSTY, but majority of the other ones, I'm still up on those positions and they still receive me income. So that is awesome. But my income since then has actually stayed pretty flat. $1,800, $1,800, $2,100. So you can see here that my income has stayed flat, and it's continued to produce roughly about $2,000 every single month. So that is awesome. So now we kind of have conflicting views. They go down, their dividends decrease, but I've only seen pretty much flat income from my cover call strategy ETFs. I haven't been really buying anymore. I haven't been selling too much, so they've been staying flat. So why did I decide to buy these cover call strategy ETFs? I did it for a little bit of protection, and you can do this too in your own portfolio. What I wanted income. What provides income? Cover call strategy ETFs. I wanted a basis, some sort of monthly income or weekly income that YieldMax produced, that MSTY produced, that Coney and Babo, PYPY, XYZY, they all produced, and they all helped me to make $2,000 every single month, although my principal does take hits on that. You see my cover call strategy ETFs, YieldMax down 25%, XYZY 32%, 26%, 28%. That's what my portfolio looks like. But I'm taking that income and I'm buying better long-term investments for total returns. I'm buying HIT. I'm going to move myself up here. It's like an elevator. I'm buying HIT. I just hit a voice crack. I'm buying UNH, which I'm currently up 23%. HIT, I'm up 10%. I'm buying Humrick and Payne up 30%. Udemy, 4%. I was going to say MSFO, but that's not true. I'm not buying MSFO. I bought 3 ETFs recently. XIC, XEI, VDY, all great Canadian ETFs, which I'm all up on. So I'm using, and I got my Babo dividend. I got my Babo dividend today. I just received maybe about $300 USD, which I can now put towards more investments, which I think is awesome. And this income really gives me stability. Let's say, I'm going to go down the elevator right now. Awesome. This income gives me stability so that if I am to quit my job, I have $300 coming in a week, or I have $1,000 coming in, or $2,000 coming in every single month, which can help me out in those times. That's just the basis. And right now, my basis is holding strong, which I love. But here's the thing. It's true. In down markets, cover call strategy ETFs, they go down very hard. So in my opinion, is it a great long-term strategy to hold cover call ETFs? No, it is not. The only reason why I'm doing it is to have that income base. But in the meantime, I'm aggressively building other stocks, positions in ETFs and indexes, which are going to be the new basis of my portfolio. And that income that's there is going to be there to help me catapult and really as some sort of insurance, in my opinion. I love the way I did it. I loved buying YieldMax and I love buying these income ETFs because it showed me, okay, what is the possibility with just even small amounts of income, what you could potentially return in terms of cash flow and income. But in terms of a total return, they've not been the best. And it's a great learning experience. I'm young. I'm 22 years old. So really, if I was to invest in something like SCHD and put a lot of money there over the long term, it would do fantastic. I do think the best way, if you're maybe starting your portfolio or you do want to get into cover call ETFs, I say get in slowly. And the way I would do this is I would have majority of my position, maybe an SCHD or a long-term ETF, SPX, or something following the index. And I would look to slowly build my monthly income with those core positions. You could buy YieldMax, you could buy QYLD, but what I would say is I think they're great if you need income for maybe a year, or you're uncertain about maybe a new job change. Maybe there's an unexpected event that hits and you don't think you'll be able to work. I think cover call ETFs are fantastic for cash in the short term, but do I think they're amazing long-term investments? No, you're much better investing in VOO, VTI, SCHD, SPX, anything that follows an index, in my opinion. But nonetheless, with all that being said, I will continue to sit here on my Saturday nights and I will watch cash come into my account every single week, which I love and which I'm super grateful for. And I'm only going to continue to build this position. We can't stay at $75,000 forever. We got to go up. And I'm aggressively buying HIT, for example. And I'm looking to aggressively buy potentially Udemy as well. It all depends. And I'm looking everywhere for all these other individual stocks and ETFs. And I'm all doing it on the backbone of cover call strategy and synthetic cover call strategy ETFs, which combined with my job are producing a lot of income, which I'm then using to pick up great companies at great prices. So that is how I'm using cover call strategy ETFs. Is it dangerous to use these ETFs? Potentially, because if there's a downturn, your ETFs could drop 20 to 30% and they might not recover. And if that is your entire net worth, that is a very dangerous position to be in, especially if you have dependents or you have family members that rely on you. But I do think for immediate cash, they can be really good, but you have to be careful. You have to know that what you're willing to put in is potentially what you could lose with these ETFs, just like anything with investing. But definitely have a plan for if you're investing with cover call strategy ETFs. Know what you're buying. Look at the performance, the history of the ETF. Look at the performance and the history of the dividend and see, okay, does it fluctuate like crazy? Is it too insane for me, or is it a little bit more stable? YieldMax, I found to be, they fluctuate like crazy. And I do find that YieldMax, they pay out, their dividend yields are way too high in order to retain any sort of NAV in their ETFs. Their NAV does erode. But other cover call strategy ETFs have performed fairly well over time, such as QYLD, although going down 32%, has returned roughly about 10 to 15% in dividends over a 13-year time frame, which I think is pretty solid for income. This has really just been my experience showing you guys, okay, how have my cover call strategy ETFs performed over the long term? They look down like crazy, but I've received a lot of money in terms of dividend income. But yeah, I really hope you guys enjoyed this video. I am trying my best to try out this new style of editing, and we're going with it. So thank you very much for watching. If you guys did enjoy, please do give this video a like. It really does help us out. We're up to 8,537 subscribers. Stick around till next video, and I hope to see you guys then. Please do take care till next time.